Okay, guys, we just got really great news for QuantumScape. There's a new partner in the mix that's going to help them figure out how to commercialize and manufacture that ceramic separator that is the critical component to bringing their solid state batteries to the market. Let's take a closer look at what's going on there, what it means for QuantumScape, and what it means for QuantumScape investors. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by the Motley Fool. You should check out our special link. Go to fool.com/unscripted. You can get access to the Motley Fool's 10 best stocks to buy right now. I really want to encourage people to check out that link. Our partnership with the Motley Fool is the reason we get to make these videos. The Motley Fool has been helping investors for more than 30 years become smarter, happier, and richer. They can probably help you too. Go check out that link. All right, you see right here on the screen, this is what's happening with QuantumScape stock today. The stock is up basically 15% and it's skyrocketed. And here's the news that's driving it. This news came out yesterday afternoon. And the short version is that QuantumScape is partnering with one of the most innovative manufacturers in the world, and that's Corning. So what is the deal? In short, it's a joint venture to develop manufacturing capabilities for that separator, that ceramic separator. Here's the key line, right? The company's going to work together with the goal of high volume production of the separators for commercial applications. So what does this mean? In short, the thing that's been most challenging for QuantumScape, number one, is getting to the point where they have the product and the process to manufacture it. And over the past couple of years, it looks like they've moved very, very close to that with Cobra and Raptor, their processes to get the ceramic separator to manufacture them consistently and then to manufacture them in a high enough volume to meet commercial applications. So it looks like we had a lot of progress with that. We've seen the partnership with Volkswagen that's been in place since before the company was even public continue to expand. Now, we also know that there's another OEM joint venture that's undisclosed at this point that's lined up to do something similar to the JV that's in place with Volkswagen. So those are non-exclusive deals, which means that QuantumScape maintains complete control over its intellectual property, has the ability to sign more JVs with other manufacturers, has the ability to stand up its own manufacturing to produce product and then sell it to whoever it wants to, right? So it's good that those JVs continue to be non-exclusive. That gives QuantumScape a lot of optionality as it builds out. Now, let's move back over again to the deal with Corning. So what does that mean? The second big issue, we know, I talked about the two challenges. Number one is figuring out the technology and then figuring out how to manufacture it. The other part of that is the cost. You know, we're talking hundreds of millions of dollars to stand up a battery manufacturing facility. That's a lot of money that QuantumScape simply doesn't have. If we take a look at this slide, you'll see QuantumScape, the school bus yellow there, that tangerine color, has been steadily depleting its cash since it went public, you know, with about $1.5 billion in cash. When it went public, it's already spent a substantial amount of that with less than 800 million at the end of the most recent quarter. Again, that's going to get bolstered with some cash payments from its Volkswagen JV at some point. But here's the thing. This purple line down here, that's revenue. This is still a completely pre-revenue company. It hasn't sold a single thing, and it's not likely to actually generate any revenue, probably at the soonest next year, mid next year at some point, third quarter over the summer. I think there's a good chance that it might start generating some revenue with its deal from Volkswagen. But right now, it's spending money and not bringing any in terms of cash flow. There's not enough money to build the factories and continue to fund operations and R&D as it scales up to get revenue, right? So the partnership with Corning is a very big deal. Two parts of it. Number one, obviously, Corning is probably the world expert when it comes to ceramic and glass. This is a great partner to help really optimize your manufacturing process. And maybe even more importantly, this is a company that just knows how to manufacture with precision. They're very, very good at what they do. This is a very tech-focused, innovative company that knows how to manufacture millions and millions of volumes of units. And that's very, very valuable, I think, for QuantumScape to have that partnership in place. All right. What does it mean for investors? Honestly, I don't think we really know exactly what it means for investors because not a lot has been disclosed. I can promise you as soon as we have SEC filings with any level of detail, we'll be peeling those apart to see what it means for investors because we need to know, besides having a manufacturing expert in its corner and as a partner to help build out facilities, what is it giving up? How much of the revenue is it going to retain? because it's going to have to make some trades with Corning, right? Corning sees opportunity to make money. The question is how much money is going to be left over for QuantumScape shareholders. Obviously, the market is very bullish on this, as it should be, because this is another massive step towards commercialization to a company that's actually selling a finished product. So it is a very, very big deal. But I think investors should be really conservative and mindful about what does it mean in terms of the company's ability to generate revenue and eventually turn that revenue into cash flow and free cash flow per share over the long term, being a profitable business. Okay, lastly, is QuantumScape stock a buy right now? I want to start with just thinking about the price and the valuations. The stock price is about 14 bucks a share right now. It's actually still below where we saw the short squeeze run up earlier this year when we got some of the announcements about the deals that it had in place. Let's think about this from a market cap perspective. Stock price doesn't matter. We need to think about what the company is worth. And now it's trading for about an $8 billion market cap. That's a lot. It's still way, way, way below what I think was just an unrealistic peak. Okay. So $8 billion, what does that mean? That means that the upside is still absolutely there. Can this become a 25, 30, $50 billion business over time? You think about the size of the addressable market for batteries, for autos, number one, it is a massive market. But solid state technology, their IP, probably is going to translate to lots of other things as well. Portable devices, maybe even medical devices over time. There's a lot of potential for it. We know that. But right now, being realistic, electric vehicles, that's the target. That's the big opportunity. And that's where most of its partnerships are going to help it get. So is this still a risky business? Absolutely. Absolutely. What do we have? A bunch of joint ventures to try to advance the technology to the point where they can manufacture it at scale and at a cost that makes sense. We're not there yet. So investors need to be very conscious of that reality that, yeah, this is great news. This is a huge step forward, but there's still a tremendous amount of risk involved. I still think you have to be very mindful about position sizing. This is not a back up the truck moment by any means. Be mindful about the risk, that the risk of losing money is still very, very real. I think the upside is enormous. The asymmetric potential, I think, is very much still there. But just remember, that means that there's risk as well. So just be mindful of that with position sizing.